Hello everyone, welcome to this week's weekly market view for Monday the 4th of December to Friday the 8th of December 2023. My name is Vishal. Let's get started. All right, let's start with the Nifty analysis to begin with. And as we can clearly see on the chart, finally, we have broken the all-time highs and very, very strong candle. And you can call this because of news or elections or whatever you want, but this is a very, very strong candle. And now if this candle closes as we are seeing it right now, then potentially we are in the creation of a fresh and a new monthly demand zone. And that's a very, very strong sign for our markets because after a very long time, we are seeing a monthly demand zone created after this demand zone was created. So this pullback or any kind of pullback into these levels will hopefully induce more buying, and the trend is likely to continue to the upside. If you look at the weekly chart, on the weekly chart, we had a clear gap up because of the news or the elections, whatever you want to call it. And then now we have this new level of demand, which is this rally-based rally. This is close to around 19,880 to 19,632. So this is your closest level of weekly demand, currently very far away from price. So we will have to wait for a deep retracement. And then you also have this daily demand zone. So in the current situation right now, if you look at all your technical indicators, they are all going to be showing you extension indications, right? So all your RSIs and everything is just going to be showing overbought and so on and so forth. Does that mean that one should start selling the Nifty now? Absolutely not. Markets are very, very strong. In fact, even today, we might see a slight gap up opening. But eventually now, we may not just continue seeing this rally, which means that the markets might take a little bit of a pause, might do a little bit of consolidation before retracing back. And that would be a healthy move for the market. So anytime the market just goes up in one direction, it's not a good sign. It's like a sign of a bubble. And bubbles generally tend to burst. So that's not going to be a good sign for the Nifty if it just continues to move up in a perpendicular direction. So we need to have some consolidation, maybe even a pullback before the market starts to gain fresh momentum to the upside. On the daily chart, again, we have this rally-based rally. So this is also a level to watch out for, 20,153 to 20,007. And now the closest level on the, let's say on the intraday charts, let me just go to the 30-minute chart here. So we are seeing this this level of demand over here, rally-based rally. So this is an area to watch out for. This is your closest level of demand towards where the current market price is. So just 100 points away. And there is a possibility that this level might trigger first even before the lower levels come. Okay, so keep a close watch on the Nifty at this 30-minute level of demand. And unless and until this 30-minute of demand gets violated, then only possibly we can think about shorting the Nifty, that also for small moves, maybe towards these gap levels, etc. But unless and until there is no break of demand zone on the Nifty, absolutely no shorts, okay? Because markets have created new highs. And generally, when the market creates new highs, there is always a strong momentum to the upside. Let's move on to the next index, which is the Bank Nifty. All right, so Bank Nifty also same story. It was lagging behind the Nifty, but eventually it has also taken off, and it's more or less trying to follow with the Nifty. And we have come right at this resistance point on the Bank Nifty. Now it'll be interesting to see, just like the Nifty, if we get a close above the resistance point, which means that if we do get a close, then this potential level will also become a level of demand. Not yet, but it's in the forming. If you look at the weekly chart, prices are trying to push above, creating this new level of demand. Okay, this is going to be a very, very strong level of demand, 44,052 to 43,225. And now, if you look at the daily level, so this was the last threshold for the Nifty, which got violated. So no supply zone now on the Nifty. And your closest level of demand is this rally-based rally gap level. Now, we don't know how and when the markets will pull back to these levels, but this is what it is. And yeah, the trend looks very, very strong. If you go on to the 75 minutes chart, we have this, I think let's put it on the 30-minute chart just once again to check. Okay, so let's go to 75 minutes. And on the 75-minute chart, we have this fresh and new rally-based rally. Then you could possibly mark this level even this way, right? So this is your 45,764, 45,621. Any pullback into this level will induce more buying and no shorting unless and until this demand zone gets violated. That will be the first sign that the market wants to possibly take a little bit of a pause and retrace down a little bit deeper where shorts can be initiated. But unless and until this demand zone gets violated, no short should be initiated. All right, let's look at the next market, which is the Nifty Financial Services. So let's look at Nifty Financial Services. And yeah, so Nifty Financial Services, Bank Nifty, they have all taken, they have all made all-time highs. Again, we'll have to wait and see how this monthly candle closes on the Fin Nifty. We are still in the month of December, and this could, do anything at the moment right now. Just like the Bank Nifty, we have also a level of demand in creation here, not yet created. And any significant close above these highs will possibly help create this new level of demand. On the weekly chart, it's very evident. Once this weekly candle closes, then more or less, this will become a strong rally-based rally of demand on the Nifty Financial Services. And then you also have this level of demand on the daily chart. Right, that's a very clear level. So things are looking pretty bullish right now, without a doubt, on the indices. And if you look at the 75-minute level, just like how you have the level on the Nifty, you also have this level on the Bank Nifty. I'm sorry, on the Nifty Financial Services, right? So this is your rally-based rally. And again, unless and until this level gets violated, no shorts, till and until this level holds, we could see more highs, right? So 20,596 to 20,495 will be the level to watch out for on Fin Nifty. All right, let's look at the USD INR now. Let us see what the USD INR is doing or giving us some kind of information. So we have been talking a lot about the USD INR for quite some time, isn't it? And you can see very clearly like how after consolidating over here, it is also struggling, to move to the upside. And I clearly mentioned in the past sessions also that unless and until we get a clear breakout on the USD INR to the upside, the indices might not correct. And if USD INR continues to consolidate or remain in a range, then there is a possibility that the market might continue to rally to the upside. Now, although the USD INR has been right at this edge of this consolidation, which means that at any given point in time, it can give or lead to a breakout. That is also giving us a sign that our markets, although they are rallying and rallying to the upside, we got to be a little careful, because at any given point in time, if the institutions start to sell, then we will see a big retracement, right? So yes, on an intraday basis, you could possibly look at longs and try to enter at good levels or also on those 75-minute level demand zones. But if you look at the overall picture of the USD INR right now, the USD INR is struggling to break this supply zone. And unless and until the USD INR is unable to break this supply zone, I don't see any weakness coming in on the indices. So this can be a good comparison for you to match your charts with the indices to see how much strength or how much intensity is left on the indices. So on the USD INR, we have 83.39 and 83.46 still holding. And no clear level of demand. Demand is right here. So demand is far away. We have these gap levels, but again, these levels are really far away, right? So this level is holding. Let us see for how long it holds. And let us see whether the prices start retracing down. Any retracement to the downside on the USD INR will indicate more bullishness on the indices. All right, let's quickly have a look at the India VIX now. A lot of things have changed on the India VIX since we last saw it. So let's quickly have a look at it. And we had done some markings on the chart, if I'm not mistaken. Yeah. So let me bring this daily chart to you guys. And if you have noticed that because of the elections, there has been a spurt in the India VIX, and that is quite expected because on any big news, the expectations are always rising, and because of that, your option premiums, etc., they tend to become more inflated. After the news comes out, the VIX starts cooling down, and of course, your option premiums also start cooling down. Okay, so here you can see we still have a level 14.86 to 16.18. There is still one more possibility of a spike into these areas, but then we expect the India VIX to cool down. Okay, so right now we are at close to around 13%. If we get to 15% or even 16%, then we just got to wait for the volatility to slightly cool down. But at this point in time, premiums are going to be starting to get inflated if the price of the India VIX starts moving towards this 14.86, 16.18. Once the price gets in over here, then possibly the premiums will start cooling down. So this is how we could gauge the India VIX and more or less gauge what the option premiums are also doing. If we look on the stock specific front, I'm looking at two stocks right now. I'm looking at Hindustan Unilever. And if you look at Hindustan Unilever, it has taken a nice move, or it has made a nice move from this monthly level of demand. And it seems like from this level, it might continue and start moving towards this area here. So more or less, this looks like a continuation move to the upside, might move towards the 2800 odd levels. If you look at the weekly chart also, this level of demand has held very well. And now we are seeing this nice rotation. So this is that accumulation, and more or less this is that breakout to the upside. So we might see first Hindustan Unilever moving towards this level, which is 2670. And then if it breaks this level, then we are more or less moving towards 2850. All right. Another stock on the radar is HDFC Bank. So let's quickly have a look at HDFC Bank. It has gained a significant amount of momentum because of Bank Nifty making highs. And let us see how much more momentum is left in this stock. So if you look very closely on the monthly chart, the price came nicely into this monthly level of demand, 1462. If you were not able to enter at 1462, you could have possibly entered close to around 1500 levels as well. And since then, the market has been rotating to the upside. Okay, now if you look at the overall supply level, we are seeing these gap up, and we do have this once daily supply zone here that we need to be a little aware. And there is also a gap level over here. So we'll go to the smaller time frame charts, and there is a possibility that and it could be possible that we might gap into this level. So this area, which is 1626 to 1639, may act as a little bit of a profit booking area. The reason being is the stock has rallied all the way from 1450 odd levels to 1620. So that's nearly a good move and a very, very decent move. And usually when prices come to these expensive odd levels, we will more or less see some profit booking come. So let us see, let us wait and watch. If we do get to see some kind of profit booking, if the market continues to move up, then we might see HDFC Bank also moving towards this level of supply. So 1626, 1639, first level of supply, where we might see some profit booking coming in, and 1652 to 1671 will be the next supply. All right, everyone. So this is it for this week. I hope you enjoyed the analysis. Once again, if you are not yet a Sherkhan Education subscriber, do hit the subscription button and become a part to get regular notifications of such videos. And if you do like our videos, do mention your valuable comments in the comment section. Thank you so much, everyone. Have a lovely trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.